The U.S. Federal Reserve is prepared to raise interest rates higher, and hold them there, in order to bring down elevated inflation in the world's largest economy, Chairman Jerome Powell said at the Jackson Hole Central Banking Conference in Wyoming. We are prepared to raise rates further if appropriate, and intend to hold policy at a restrictive level until we are confident that inflation is moving sustainably down toward our objective, said Powell. Powell said Fed policymakers would proceed carefully as we decide whether to tighten further, but also made clear that the central bank has not yet concluded that its benchmark interest rate is high enough to be sure that inflation returns to the 2% target. It is the Fed's job to bring inflation down to our 2% goal, and we will do so. We have tightened policy significantly over the past year. Although inflation has moved down from its peak, a welcome development, it remains too high, added Powell. On a 12-month basis, the U.S. total, or headline, PCE, personal consumption expenditures, inflation peaked at 7% in June 2022 and declined to 3.3% as of July, following a trajectory roughly in line with global trend. On a 12-month basis, the core PCE inflation peaked at 5.4% in February 2022 and declined gradually to 4.3% in July. The lower monthly readings for core inflation in June and July were welcome, but 2 months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal, said the Fed chair. We can't yet know the extent to which these lower readings will continue or where underlying inflation will settle over coming quarters. 12-month core inflation is still elevated, and there is substantial further ground to cover to get back to price stability, added Powell. Following a pause on rate hikes in June, Jerome Powell-led Federal Reserve raised its benchmark lending rate on Wednesday to the highest level since 2001 to tackle above-target inflation, and signaled the possibility of further increases ahead. The quarter percentage point rise lifts the Fed's key lending rate to a range between 5.25% and 5.5%, said the rate-setting Federal Open Market Committee, FOMC. FOMC members voted unanimously to hike the overnight interest rate to 22-year high to bring inflation down to the 2% target. The central bank added that it will continue to assess additional information and its implications for monetary policy. Policymakers in U.S. are entering a new phase of their campaign to bring inflation back to the 2% target. After an aggressive interest rate hike cycle in 2022, Powell and his ministers have slowed the pace this year, and indicated they may be close to wrapping up rate hikes. Powell signaled that the policy has shifted to a more deliberative phase where risk management is now critical. He noted the economy may not be cooling as fast as expected, saying recent readings on economic output and consumer spending have been strong. The U.S. economy grew at a 2.4% annualized pace in the second quarter, a surprisingly robust reading that prompted several economists to boost forecasts for the third quarter and reconsider odds of a recession. Please support my channel to subscribe, like and share. Thank you all.